Domino's pizza.
Domino's, I do like long term. I mean, I know they bounced below 300. Long term, I like them. They should eventually get back to that $500 mark, but I wouldn't buy it unless it was like at 300 to 275. But I do like it for a long term hold for sure. So in 2010, they were at like $23, and then they ran up to $567 in 2021. Of course, they corrected, but Domino's, the efficiency on the technology side is amazing. I do like the company.
You don't think that people becoming more health conscious is going to hurt Domino's?
They made a brilliant move the other day though.
But where are people eating Domino's though?
This like Midwest, Southwest.
Yeah, they definitely
middle of America.
Yeah, for sure.
Yes,
for sure.
Why I'm
even here,
South Indiana.
Even Domino's here.
Domino's
on Central Avenue.
Domino's. You won't eat at a diner, bro.
Yo, he's capping. Like, they doing a 5-5-5. That's a fact. That's happening.
I'm a food snob, so the circles that I'm in,
bro.
Are TV time.
They eating Domino's, bro. They eating Domino's. They eating the breadsticks from Domino's. They eating the cheesy. They eating all that, bro. The kids.
And STK, do you pigeon food too?
That was Benny Hanna, bro. It's okay.
Yeah,
we left STK alone. We haven't.
Yeah, me too. The service terrible.
They never offer us anything in return.
Yeah,
for some of the recognition.
We've moved
and the
on.
tater tots ain't hitting like how they used to hit.
Tater tots.
Shout out to the tartar. We don't do tater tots.
But no, my thing is, I just feel like pizza. If you are going to indulge in pizza, if me personally, right, I would just go to a pizzeria. I don't want to order fast food pizza.
That's a New York bias, though.
But it's a value pizza. That's the thing. It's like, why do people eat Little Caesars?
I don't eat Little Caesars.
I'm not saying you
Little
do.
Caesars. That's even worse.
Little Caesars been trash.
But people eat it.
That's even worse.
It's the reason that he can build a center in the middle. He can build an arena in the middle of Detroit.
Well, they also own a bunch of other stuff.
And he owns some real estate out there too. That's what I'm saying. But it was built on the brand. People will eat value foods. That's why people eat McDonald's.
Value foods.
Yeah. So it's like if I can get not in terms of the actual like this is great for you. I'm talking about in the pricing. So if it's $5 for 3 pies, people gonna buy it. Like, yo, I can get 5. I'm gonna do it. This is the reason why they have
the video now. They're too good to even eat.
No, they're not gonna say there. It's why they have a dollar menu at McDonald's and and Burger King has a dollar menu because they're looking at it like, wait, I can get 2 Big Macs for $2. They're gonna do it because it appears to be a value. Now, on the health side of it, obviously we know that it's not the healthiest thing, but it is a value offer, so that's why people do it. But Domino's, their stock did go up. They made a very, very important strategic partner the other day. Did you see it?
Yes. Tell us some more. I mean, Troy.
I shall. They have now partnered with Uber Eats, whereas they didn't before. They would have their own exclusive drivers, and they were trying to go that route. Then they added technology where you can order from where you are, and now they have finally come to Uber Eats, which from my assumption, I believe will help the company because that opens you up to a more of a broader audience, and now there's more opportunities for people to order and have their food delivered to them because there's more drivers.
Uber Eats before?
No, they just got there.
But because they have their own,
they have their own drivers.
The reason why I love Domino's in the fast food space is because of like the tech suite that they have there. So like the efficiency of like ordering to getting it to your door is like probably twice as good as Pizza Hut's, and that's their real competitive advantage. We
don't got no Pizza Huts around us though.
Pizza Hut used to be good.
It's all right. Pizza Hut's all right.
Domino's is always nasty. Pizza Hut used to be good back when I did indulge in that type of behavior.
You once indulged in Domino's?
I never liked Domino's, but I did like Pizza Hut at some point. Even the square pizza.
The cheesy bread's official.
Yeah, cheesy bread.
The cheesy bread's official. And they when they had the buffalo wings, that was like, do they still do? I think they still do. Those was good. Now they got the cinnamon rolls.
Can we zoom in on Rashad's face of disappointment?
He's trying now. The next thing I'm gonna do is have a video when the children are all together and they're eating Domino's. That's the next thing we're gonna have.
Niles won't be there.
He will be there.
He won't eat no Domino's. Hey,
he will. You see the face he's making now? Like, what are you doing? That's the face he's gonna make when he's like, I was hungry.
True, but I like Domino's. The technology platform is amazing. They're better at efficiency and their margins are marginally better than their competition. So that's the reason I like it.
Oh, and the ticker is DPZ. So I know some people like, well, what's DPZ is the ticker for Domino's.
Domino's, yeah.
Yep.
Yep.
Phillips?
Yes.
Phillips 66?
Yes. No. Well, we can do that. PSX.
Okay,
We're
let's do
gonna do
that.
that one.
Yep.
Not one of my favorites, but the stock has performed pretty well. Like I like it at the $60 range. It's almost at 110 right now, so it's just too high. There's like no upside return. Like the all-time high is 123, so to buy it at 107 would be a huge mistake. I know people want some diversity in commodities and asset classes and stuff like that. That's why I picked this one, but I wouldn't touch it unless it was at 60. Remember, like at one point, talking about oil and natural gas was the hottest thing, and then it reverted back to the mean and then below. But Phillips is solid. But like I said, from an investment standpoint, I wouldn't touch it unless it was like at 50 or 60. And I would probably ride it out to like 110 and exit there. And we're almost there.
How about 3M? Most people are not familiar with 3M, but if they look around, especially if you're in the world of education and you start looking at the products that are being ordered, like the supplies, you're going to start seeing 3M a lot. They've had a rough year, down 21%, 22%. What about 3M?
I don't love this one. If I had to touch it as an investor, it would be $74.64. So when y'all do your review videos, put that price in there too. We're going to start reviewing some net worths. I'm going to get mad one day and we're going to have a whole nother talk about net worths. And I've been writing complex every week about this podcaster's earning list. Okay, I'm going to do the Jim Jones and put my own list out. Some of y'all favors ain't as high as y'all think, but 74.64 is why I like Triple M. This is a comedic bit written by 85 South. I'm not being cocky or arrogant. I haven't changed. But yeah, they've had a troubling year. That slide down from 200 down now to 104 has been tremendous. If I can even better, if it potentially went back to that COVID level of like $42.25, I would like it there. But 3M, I don't love on the earnings side for sure.
All right. We talked about Microsoft already, so let's go into Meta.
Meta, I think that they're going to do very well in earnings. I got a little message like in that group that I'm in with Zuckerberg and some of the team members, like they're pushing more into international subscriptions.
You're in a group chat with Mark Zuckerberg?
Yeah, on God.
I'm just
on God. He says on God.
Hold on.
He said on God. That's God. It's real.
Can we zoom in? Can we zoom real quick?
Can we get the zoom? Can we get
real quick?
That's when his camera should zoom in on him.
I can't see it, but I won't take it. I'll take your word for it.
Yeah, it's one of the broadcast channels on IG where he like send out updates on the stuff that they're working on. But they are looking to expand subscriptions into more countries over the next couple months. So ever since he's been in that gym, and I was talking to Ish about this last night, people have to be very careful. Like when you consistently talk negatively about somebody, you'll give them motivation to beat you. Elon, I love you. I hope you come on the show, but look like Mark Zuckerberg will beat your ass if you get in that dojo with him, right? If you get in that ring. There's a competitive flair that I don't think he's been as ambitious and hungry probably since they went public. So of course with this and a couple other iterations, I think Meta's on a good run for sure. So and I think that the earnings would be great.
All right. Google
will be amazing.
Alphabet.
Google's going to be absolutely fantastic. I love it.
How about Spotify? We just saw that they raised their premium. I think it's now $19.99 a month.
Mm-hmm.
Is that what they're doing? What's your thoughts on Spotify? We've been now I wouldn't say critical. We've put them on watch for the amount of money that they have spent with the lack of return on some of that investment. So what is our thoughts on Spotify?
It's not a company that I love. I think they'll bounce and recover and revert to that mean of like 225. But if I was a better man, I wouldn't put a lot of money into being a long-term shareholder of Spotify. The margins are thin. Shout out to Ray Daniels. I was having a conversation with him. Like the music industry gets 25% of their profits. That's troubling. So I don't like the pricing model. Charlemagne and Schultz went on a big rant this weekend talking about streaming services and content creators And are we like going to see a slow decline of many of these? I don't think Spotify will ever blow up. I've personally been using Spotify for maybe 3 or 4 years, but the margins in the business are just not amazing. So I wouldn't invest in it long term.
He says he's not into that. NextEra Energy, they're having a slightly down year, down 6%, almost 7% for the year. What's your thoughts in the energy space? NextEra, the ticker
is NEE.
NEE, yep.
Yeah, it's not bad. I like it at 70, and maybe at 50 is too high. Above there, the all-time high is 93.72. So a rule of thumb, if whatever the all-time high is, a great place to invest in it is 50% from that high. That's just too high. NextEra is an okay company. It's a B-class company. It's not A tier. Hey, what you think of NextEra? But no, I wouldn't invest in it right now unless it got to that $70 mark or $50 mark.
Gotcha.
All right, let's go to Crocs. This is interesting. My son wears Crocs all day, every day.
I'm wearing them right now.
I never owned a pair of Crocs. But
really?
Me either.
You would like them?
Probably would.
You would like them?
But yeah, they've changed the game. They've changed the game for footwear. So where do we stand with Crocs?
The stock has been on a remarkable tear since 2017. Of course, in 2020, it had an incredible move up from $20 to 183. I have to look at the margins of the business and like the revenue that's coming in. I know they have hit like a fanatical cultural significance, but probably not unless it was at $40. The high is 183. So I'll have to wait till like 40 before I would be sold on buying it. But the company's done well the last couple of years. Like they found a comfort spot, a niche spot. And then of course, Soleil, he has his Crocs that he makes that I think are amazing. But I will have, as an investor, I have to wait till like $40 before I'll be willing to buy it.
$40 on that. Now let's talk about one of my favorites. Spoke about this during the pandemic. A lot of people have sent text messages. I appreciate that they've made money in this investment. Thermo Fisher Scientific, ticker is TMO. Over the past 5 years, up 146%. Kind of trading sideways this year though. Had a downturn last year. What's your thoughts long term on Thermo Fisher?
Phenomenal. It's trading sideways, but it's like at 569. Maybe they should do a stock split. Their Class A share owners probably wouldn't want that, but they've been doing incredibly well. I think the slowing down or sideways movement that we've seen is like reflective of what the overall economy and stock market is doing. But amazing company. It's like one of the better companies that's not talked about a lot. Maybe in 2 or 3 years they'd be at 700. But yeah, this company is solid. I wish they would do more on the marketing side. I think that would help push them a lot more. But that run from 2011, 2012, going from 65 up to 600 has been amazing. That's 10x return. There's nothing bad I can say about this company right now at all.
Yeah, they had an incredible run during the pandemic when you're talking about people are going to have the vaccine, and who's actually going to be bottling and storing that vaccine to make sure it gets to facilities. Thermo Fisher was one of the leaders in that. And so it's interesting to see. There'll be, not that COVID is something that can't come back, but it looks like we have that under control as of now. But I'm sure there'll be something else in the next year or 6 months, or maybe tomorrow. We never know. That's why we talk about looking at the healthcare field, because there's always going to be something and there's always going to be a need. Thermo Fisher is one of those ones that we definitely have on the watch list.
Yeah, and I want to say it again. If I wasn't investing in tech as a primary sector, healthcare would definitely be it. Like pharma first, and then broader healthcare companies, like that will make up the majority of my portfolio. Because if you look at it, healthcare was that before tech was that. Like in the 1990s, pharmaceutical companies would give all the high gains. So yeah, if you're not heavily invested into tech, and going back to the point about Domino's Pizza, I think people want to be health conscious, but the way our system works is that we're going to make sure that 80% of the population isn't. Healthcare companies, as a result, are going to end up going up a lot more. That's why Eli Lilly's done well, Thermo Fisher has done well, Stryker's done well, because there's always going to be a population of sick people by design in this country.
All right.
Yep.
All right. You want to get one more?
Sure.
Yeah. Let's talk about, this is a good one. Chipotle. Chipotle just seems to be I mean, every time you look, I'm looking at this stock. I'm saying to myself, will it slow down? Will it slow down? Will it pull back? What's the new innovation? And it hasn't. And it hasn't. And I'm not sure if it's going to anytime soon. What are your thoughts on their earnings report this quarter?
I think they'll do well. If I had one regret of like a stock that I didn't invest in and shouldn't have held on too longer, it would be Chipotle. For a while, it was a lot more volatile. If you go back to like 2014, 2013, let me see. So yeah, in 2015, it was at 740. It went down to 264 in 2018. Everyone thought it was done. That was the consensus. Like they won't be able to recover and get back to those highs. And all of a sudden, the marketing got better, margins got better. As the world desired, like you talked about, Rashad, to have like cleaner eating, they became a viable option. They are like our generation's version of Subway as like the fast food healthy place to go to. And they've been on a tear. I know this is one of Trap's favorites. Yeah. So I want to give him credit for that. But yeah, if it's one that I missed out on that I wish I could have had, this is that one.